Jim, the financials over the last few weeks have really started to come alive, and we're looking at Goldman, Morgan, and especially Goldman now. We're starting to hear rumors that they're going to pay that TARP money back early.
Well, I think Goldman's going to. You have the stress test, and then you have the quarter. Now there's this ICBC. They monitor ICBC very closely there every night. So I know that there's a possibility they could sell some of that. Goldman is in an awkward position in that they actually would want like this giant tax on the companies that take money from the government, because then they would be able, if you quit, if you were Citigroup and you were a top guy who handled a major account, you could quit, and then Goldman could hire you, and then you could get that account. So I mean, Goldman could target, say, the 100 best people who are going to make 250, that make no bonus,
right?
And be able to pay them big bonus. So that one of the unintended problems with this legislation is that a major firm could escape the clutches of TARP while others can't because they need the money. So therefore, there would be this brain drain toward Goldman.
Poaching the
I think
top
that's
talent.
going to happen. I think that's going to happen. There are very few financials that can do that, and only Goldman, I think, will have the cash on hand. Mm-hmm. Goldman's also an interesting place when you think about what this private-public partnership that Geithner's setting up.
Right.
That the only reason why a bank would ever get rid of its assets and have to knock things down, particularly if you have a looser mark-to-market, is if you wanted to just say, listen, we have no toxic assets on our balance sheet, so stop valuing us like they do. And Goldman sold a lot of its toxic assets in the kitchen sink fourth quarter.
Yep.
So what happens is that they got a higher multiple when they got rid of it. Mm-hmm. So it's possible that if someone has, say, $2 billion in toxic, they might just want to hit the bids. Mm-hmm. That's the only place where that whole Geithner plan works. So it's kind of interesting. You don't want to get too excited about the Geithner plan.
Now, you trimmed a little J.P. Morgan in your action alerts
portfolio. When you have a stock that goes up 10 points, I mean, you literally, in 10 points in a heartbeat.
Is it too late to get into financials then? Or?
No, but I think that they could easily pull back. And when they pull back, you want to be in them. I think that it's important to recognize that the BKX has gone from 17 to 30. Okay, so that's almost doubled. But remember, it's down 8, when it was at 17, it was down 80% from May of last year. So you've got this thing where you double off a very low base. This is very much like 1990, 1991. Then you wait for the pullback. You just take some profits, then you wait for the pullback. And if your biggest danger is there's no pullback, well, so be it.
Okay, great. Thank you, Jim.